Welcome to the deep dive. Today we're looking at ITC Hotels' audited financials for FY25. We'll be comparing them against the restated FY24 figures.
Yeah, and we've got their media statements and investor presentation here. It's really interesting timing, especially with the demerger happening.
Right, the demerger from ITC Ltd, that was effective January 1st, 2025, and then they listed, end of January?
January 29th, yeah. And it's important, like you said, that the FY24 numbers are restated.
Yeah.
It gives us a proper year-on-year look as if the demerger happened way back in July 23.
Got it. So the goal today is really to understand the revenue, the profit trends, and what this all means if you're an investor looking at ITC Hotels.
Exactly. What are the key takeaways from these results?
Okay, let's jump right in. The big headline seems to be record performance, right? Highest ever revenue and profits for FY25.
Absolutely. It stands out clearly. If you look at Q4 FY25 specifically, revenue hit Euro 2017 crore. That's up 17% year-on-year.
17%, wow.
Yeah.
And profits.
Profit after tax, or PAT, jumped even more, up 44% to Euro 264 crore for the quarter. And the EBITDA margin, really strong at 40%. That's a 350 basis point improvement.
40% margin in Q4 is quite something. And the full year figures?
For the full fiscal year 25, revenue landed at 333 crore, and the PAT came in at 698 crore. So across the board, very strong growth, record numbers, like you said.
Okay, so let's maybe unpack what's driving this growth. Where did the revenue boost mainly come from?
Well, a big part was the strong growth in room revenues. It seems quite broad-based, hitting retail, contracted business, weddings, even airline cruise segments.
And they managed to push prices while keeping rooms full.
Seems like it. The average daily rate ADR was around $12,500 for the year, and occupancy held strong at 73%. Both showed, pretty robust year-on-year growth.
So good demand and pricing power there. What about other areas like food and beverage?
F&B also saw strong growth. They mentioned innovative offerings, refreshed outlets. That seems to have paid off. And banqueting, especially weddings and corporate events, did exceptionally well, too.
So multiple streams contributing. Any specifics on Q4 that stand out?
Yeah, for Q4, revenue from operations was up 13%. Room revenues specifically grew 16%. The ADR in Q4 was even higher, around $15,000, up 14%. And occupancy hit 79%.
79% occupancy in Q4. Okay.
Right, which pushed the RevPAR, that's revenue per available room, up by 17%.
Mm-hmm.
And F&B revenues also kept pace with 12% growth in that final quarter.
Okay, solid top-line growth across the key areas. Now let's talk profitability. Those margins looked impressive.
They really did. The full-year EBITDA margin expanded to 36%. This is really important for investors.
And what drove that expansion?
It's a combination, really.
Yeah.
Higher RevPARs, obviously. The F&B growth helped, higher management fees coming in. Plus, they mentioned cost interventions and just general operating leverage kicking in as revenues grew.
And that Q4 margin of 40% you mentioned.
Yeah, up 350 basis points year on year. It shows those efficiency efforts really gaining traction. And this flows down to the bottom line, too. The PAT margin for the full year was 21%, but in Q4 it hit 26%.
26% PAT margin in Q4. That's a significant jump.
Almost 500 basis points year on year for Q4 PAT margin. It really highlights improved operational profitability.
Alongside these financials, they talk a lot about their asset-right strategy. Why is this important?
Well, the asset-right approach basically means focusing growth more on management contracts and franchising rather than just owning every hotel. This lowers the capital needed for expansion.
So less capital intensive.
Exactly, which can, potentially lead to better returns on the capital invested. And they're using this to push into Tier 2 and Tier 3 cities where demand for quality hotels is apparently growing.
And they have a pipeline for this.
Oh, yeah, a robust pipeline. They're talking about 50 hotels, over 4,500 keys. A lot of these are brownfield assets, meaning quicker conversions. The target is ambitious. 220 hotels, over 20,000 keys by 2030.
Though they are still investing in some owned properties, too.
They are. They mentioned ongoing investments, like a new hotel in Puri, expanding in Bhubaneswar, and using their land bank in Visakhapatnam. So it's not purely asset light, but definitely leaning that way.
And didn't they recently open their first international hotel?
They did. ITC Ratnadipa in Colombo, Sri Lanka. That opened in April 2024. And encouragingly, they reported it turned EBITDA positive already in Q4 FY25.
That's a quick turnaround. A good sign for international plans, maybe.
Potentially, yes. It shows the model might work outside India, too.
Another major theme is sustainability. How does this fit into the investment picture?
It's a big focus for them. They highlighted being the first Indian hotel chain to get the US GBC Leadership Award this year. They have apparently the most old LEED Platinum certified hotels globally, 23 of them.
LEED Platinum, that's the top certification, right?
It is. And they also have a significant number of LEED Zero Carbon and Zero Water certified hotels. It's not just about awards, though.
Yes.
Well, things like energy and water efficiency can lead to real cost savings over time. Plus, it boosts brand image and might attract certain customer segments. So it potentially adds long-term value. They even mentioned surpassing their 2030 emission targets already.
Interesting. And all this is happening against a backdrop of a pretty positive Indian economy, I assume.
Absolutely. The general outlook for India helps strong GDP growth projections, urbanization, young population, rising incomes, more domestic travel. All these factors create a favorable wind for the hospitality sector.
Plus potential growth in foreign tourists and government support for tourism.
Right. The macroeconomic context is definitely supportive.
Okay, so good market conditions. But what about their own operations? Have they improved efficiency internally?
They seem to have. They reported lower costs as a percentage of revenue compared to previous periods, things like payroll, other operating costs, even food and energy costs.
Lower cost ratios are always good to see.
And they also pointed to high online ratings and customer satisfaction scores, suggesting they're maintaining service quality alongside these efficiencies. That's crucial for loyalty.
So looking forward, what are the key things enabling future growth that investors should keep an eye on?
They laid out a strategy focusing on being asset-right, digital-first, sustainability-focused, and an employer of choice. Sounds like a mouthful, but the pillars make sense.
What are those pillars?
Things like leveraging unique Indian experiences, their signature food brands, responsible luxury, loyalty programs, having diverse hotel brands, smart pricing, customer focus, productivity.
Okay, a lot of operational levers there.
Yeah. Plus, sweating existing assets better, finding new revenue streams, keeping costs down, and having a strong team. For growth, they're banking on RevPAR increases, filling up rooms not currently at full capacity, the new Colombo Hotel contributing, and of course that big pipeline of managed hotels.
That pipeline seems key to the asset right plan.
Definitely. 50 hotels, 4,500 plus keys, and they're also looking at new revenue streams, things like sleep products, luxury dining programs, weddings, online food delivery, their business club, and pushing further on sustainability goals too.
Okay, so to wrap things up for investors listening, the key takeaways seem to be record financial results for FY25, strong growth momentum in revenue and profit, a clear strategic shift towards an asset-lighter model, a big focus on sustainability.
All supported by a positive economic environment and a really substantial pipeline for future growth. The results definitely paint a picture of a company finding its feet strongly after the demerger.
It certainly looks like a solid performance setting them up for the future.
Indeed. A lot of positive indicators in these results.
So here's something to think about. With these strong FY25 results and pretty ambitious plans for expansion, what are the potential bumps in the road? What risks or challenges should investors be monitoring closely over the next few years to make sure this growth story stays on track in what's always a changing hospitality landscape? Definitely food for thought. Thanks for tuning into this deep dive.